Have you been following Platinum's recent price moves? Does it make sense to hold it now? Well, in today's video, we're going to highlight Platinum and its demand factors in the marketplace.
Welcome to Noble6 Talks. We are here at the 49th annual IPMI conference here in Scottsdale, Arizona. And our guest is Denis Yacinthe of Jack Hunt Coin Broker. Denis, I believe you are the Senior Director Business Development Manager, is that correct?
That is correct, yes.
Do you want to give us just a brief background of Jack Hunt Coin Broker?
Absolutely, yeah, happy to. We've been in business for over 50 years. We are one of the leading wholesale precious metals sellers as well as scrap buyers. So by having that two-way market, we see flows in and out. I've been there for 10 years now, started on the trading side, now moved over to sales and business development.
Good for you. All right, let's get into this. First question for you, Denis. Platinum has recently cleared the 1,000 an ounce mark. What do you think is driving this move, and how sustainable is it?
Great question and great timing, actually, because now we've actually cleared 1,100 just in the last couple days here, which is a really, really, really big resistance point to cross over. To answer the larger question, I do think this is a very large and sustainable move. I think the factors that are underlying those moves are actually deep in play here, and we can talk about some of that going forward in the conversation. But I think what you're seeing is actually a real all-in moving price, platinum moving price here. That's, I think, going to continue to trend upward here as we see the rest of the year move along.
Well, we've heard about deficits in platinum. What does that really mean?
When we're talking about deficits, this is really mainly starting as a supply story. Mm-hmm. Right. So as a supply story, we talk about mining and we talk about scrap inflows, two real big segments of the market here. So on the mining side, what you're seeing is a continued constrained supply. Mines, particularly South America, South Africa, you're seeing deficits on the supply side that have been substantial and are actually growing. Metals Focus, they do wonderful work on these types of things. They just put their report out, and you're seeing more and more deficits on the mine side. The sustaining costs are just not there right now for the manufacturers and the miners. So that's a big part there. The other part that we see more is a decrease in inflows on the scrap side. And I know you guys do a lot in the catalytic space. Right. We're seeing just scrap not coming in the same way that it was previously, especially over the last couple of years.
Yeah, that makes a lot of sense. So what's your opinion on the gold to platinum ratio?
I think that's another big part of the story here. I think people are starting to realize that platinum is quite undervalued. When you look at the ratio, for the last several years here, we've seen it kind of in a 3.5 to 1 ratio. It's dropped down a little bit now to about 2.5 in the last week or so with platinum increasing. But it speaks to that undervalued nature of platinum. Investors, whether it's on the jewelry side or even institutionals, are starting to see that as the gold price rises rapidly due to external factors, there's not as much value there. And if you're looking for value in investment like we all are, platinum is now starting to show you that it's catching up a little bit here. And I think realistically, you're going to see that consolidate even more over the next year or so. I think it's a big part of the story we're seeing here.
So, we all make a big deal out about gold as a monetary metal, and platinum is an industrial metal. And we see here in the West that demand has been off a bit. But we also hear quite a bit about the gold to silver ratio and how it's all out of whack.
Yes.
It's been out of whack for years and years. So I'll bring it back to platinum for a second. It's more rare than gold, but it doesn't have the monetary demand that gold has. It has that industrial demand. However, aren't we seeing more investment demand for platinum now coming into the market because of these factors that you're just highlighting?
Absolutely. You couldn't be more correct about that. I think what we've seen for a long time is gold is the very attractive, sexy metal that people want to talk about and buy and show everyone this is what I'm purchasing. But platinum is really the one that's actually underneath it all, giving you a lot of value at play here. And specifically, you can see that in things like futures, right? Institutionals are going net long on platinum now for the first time in 2 years, whereas recently you were seeing them really kind of lightly put their toe in the water on platinum, and now you're seeing that surge. And I think that's also contributing a lot to that surge in pricing that we're seeing in the last several months here.
Denny, what are the consumers purchasing now? What are they looking to hold?
Right now, in the jewelry side, platinum, especially in the Asian markets, is actually becoming quite popular again. I think, again, you look at that gold price, you look at what gold is costing you in the retail market with premiums, and platinum jewelry actually has some demand again. It's slow, but it's actually building up. And I think it's important to say that when you see that ramp up, you actually want to see it a little bit slower, but more consistent. Sometimes you get these flash rallies and they can look like it's something and then it's nothing. And what you actually want is slow and steady here. And I think what you're seeing with platinum and the demand on platinum is that you're actually getting some of that consistent, steady rise.
My sense of it is that if I'm buying a bar or coin, ingot, whatever it is, for investment, or versus buying jewelry for investment, that jewelry is probably going to end up in the family's hands down the road, and I'm more likely to turn those coins and ingots into cash upon realizing my gains at some point, or when I have a better use for the money. But the point is, not so much selling the jewelry. I think once the platinum gets in the hands of a holder of jewelry, it's more likely to stick around.
Stay around, right.
To stay around, yeah.
Right. I think you're seeing a lot of what you said in the first part of that in the gold market, which profit taking. Gold's been very volatile in the last several months, and it rises up, people want to cash in, it drops, people want to buy back in, and you're just seeing that go back and forth. Whereas if you look at the platinum market, and I said we wouldn't do charts, so we're not, but if you look at a platinum chart, you'll see again that slow and steady rise. And I think that speaks a little bit to what you're saying of this is something that people are looking to hold, right? They're not looking to just effectively trade it. They want to invest in it.
Right. Yeah. So the platinum investment I made 10 years ago was just a little soon? Probably.
What's a year, a decade here or there, right?
Right. What's a decade here or there?
Hey guys, have you ever asked yourselves, am I really reaching the top of the market on my catalytic converter recycling? Are you guys decanning and getting paid via an assay? And if you're not decanning, why not? Are you still throwing your oxygen sensors in your scrap bin and getting paid pennies on the dollar? What about your spark plugs? A lot of you watching this touch handle spark plugs on the daily. Stop throwing those in the trash. They have recycling value also. I want to encourage you to take our 3-day workshop. Businesses have learned to go from selling catalytic converters in the can to decanning and actually reaching the top of the market by getting paid via an assay. Businesses have also learned how to recycle spark plugs, and they're doing it on a massive scale. Click the link below, take advantage of this opportunity, start making more profits for your business today. You mentioned a little bit earlier, secondary supply remains tight. So in that scenario, how does that affect pricing or availability for a dealer like Jack Hunt?
Well, what we're seeing, I think what a lot of dealers are seeing is that the market is tightening. The spreads are tightening, right? The buy and sell spreads are getting contracted.
Right.
Which is something we haven't seen in several years, especially on the platinum side. Gold is contracted and those spreads have gotten a lot tighter, especially in the last 2 to 3 years. But now platinum, we're definitely starting to see that trend into the market as well.
So that's a demand factor then?
That is a demand factor, yes. I think what you have now with platinum is really the perfect story that's intertwining and actually coming together at exactly the right moment, which is what we talked about in that diminished supply side, also coinciding with an increased demand from an industrial side, then also what we just talked about with that investment side as well. So when those two things come together at the exact right moment, you're going to see this kind of price action happen.
How do you see tariffs affecting this?
Tariffs are an interesting thing. They're a day-to-day story these days. I think where they could have the most impact really would be on the automotive side. From the platinum PGM angle, you see a lot of demand there. Obviously, On the vehicle side, in the converter
Well,
space.
on the automotive side, you see substitution in the marketplace
Yes.
as well.
I think, and the other side obviously is, the EV story would remove some of that demand. But I think there's actually an interesting story happening underneath there where the EV story is still expanding, but not at the rate that I think anyone actually anticipated at first. You've seen subsidies and tax credits are actually going away for those types of vehicles. And the hybrid space actually is growing quite a bit. And with hybrids, you actually see a little bit more of PGM loading.
That's right.
So that's actually an interesting story that I'm watching pretty closely the rest of this year and into next year is where does the hybrid vehicle market go relative to the EV market? And where do we see tariffs come into play with this as well? Shortly after the announcement, you saw a little bit of buying spree, but let's see if that sustains.
So when you talk about substitution in AutoCAD, you're referring to platinum being substituted in favor of palladium?
Of palladium, yes. But I think more importantly, even when you're not seeing direct substitutions with something, again, like a hybrid vehicle compared to a regular gas vehicle, you're actually seeing more PGMs as a whole in those vehicles relative to standard vehicles. So if hybrids become more of the way, especially for people who aren't ready to commit to EVs, or as we look at EVs that don't have the infrastructure nationwide to support that yet, hybrids become a way to sort of remove yourself from the gas section, gas vehicle section, and move into something more environmentally friendly, but actually helping with the PGMs.
Yeah, I see that more as a geopolitical conversation. I think here in North America, we are more comfortable talking about, hybrids versus battery electric vehicles, whereas in Europe and overseas, they're more leaning towards battery electric vehicles.
Yes, they're going full in on that, and we are taking a bit of a more measured, slow approach to this, which I think is the right approach. I don't think, we may have kind of maxed out on people who are ready to go straight from gas right to battery electric. Hybrid is this kind of middle point.
Safe spot.
Yeah.
Okay,
to transition.
So having bought 10 years ago, right, I've been waiting for a while for platinum to have its time to shine.
Sure.
Are we there?
I think we are there. And I think, if I'm being honest with you, we're just getting started. I think what you've seen in the last 2 to 3 weeks, while definitely an outsized move relative to the time, you mentioned 10 years to get to where we are now.
Sure.
I do think the rest of this year and into next year, you're going to see more moves. I think the next thing we're looking for is in that 1220 to 1225 range. If we can break through that, you're looking at, again, further and further expansion.
You're really
of the
close
market.
to it right now as of Friday.
I believe we're at 1170, 1180. And
very close.
The market's open tomorrow. And obviously it's I think it's important to say that while I see a larger room for platinum to run, we are in a period of volatility. You're going to see some down days, not necessarily to the levels that we're used to seeing. I think lower down days and higher high days is what we've seen lately, and I think that's what we're going to be looking at, and that's how we make the climb. I don't think you're going to see necessarily a direct hockey stick curve going upward, but I do think overall the pattern will show itself.
Well, in dealing with your clients, what is your sense of it as far as the psychological component is concerned?
I'll tell you right now that we're getting more calls about platinum than I can remember in the last 4 to 5 years. So it speaks to the demand popping up more than we can really recall. I think you're going to see more of that. Again, when we look at gold and its outsized moves and platinum relative to that ratio that we talked about, people are going to be watching that because that's, for us, when we look at clients, we want value for them. Right?
So the typical gold investor, do you see them also buying a slice of platinum for their portfolio?
I think it's something that a lot of people will be looking at, yes. I think as gold continues to rise, there does come a point where does it make sense, right? If you're just going to wait to buy on pullbacks, you may be waiting a while. So maybe platinum actually makes more sense because you can buy in an open market where you're not necessarily waiting for these massive fluctuations and movements.
So a year from now, if this continues, we're probably going to see a supply deficit in the marketplace. People are going to have a difficult time acquiring material for their investment portfolio. I'm talking retail investors here. I'm not
right.
talking about the
Industrial.
Production for products.
Yeah, I would expect that you're going to see that constraint. I think we're already seeing some of that on the secondary market. You know, if you're looking at what the premium is that.
So what are people buying?
Platinum bars are still very popular. You know, one of my favorite items is the Royal Canadian Mint. They make a platinum maple leaf that I think is just gorgeous. One of my favorite coins out there. But you're going to see more production, I think, on that side as well. I think refiners and mints were sort of a little hesitant to commit to producing at that level because demand wasn't there. But now you may see some of that shift in the next
What are you
year
hearing
or so.
about production at the U.S. Mint?
I think their Platinum Eagle product, again, it's a very popular product. I think where it lands from a price standpoint is going to have a big part of that.
Premiums are pretty stiff.
The premiums are tough. Yeah, I think investors now in a day where we're seeing a lot of outsized premiums look at that, and it's a value play. Again, if you're in the platinum space from a retail side, you're looking for value anyway. So you're going to look at the highest premium product, which is that Eagle, but you're also going to look and say, hey, can I get a nice brand new minted platinum bar from one of the Swiss refiners, for example? And, you know, at some point, I think you have to recognize that might do it for you, right? You don't need this product that is so expensive.
Of course.
Right? And can you, you know, if there's a world where you're looking to cash that in, can you even recover that? And the answer is most likely not.
Yeah, that's a
Well,
good
don't
point.
we normally see premiums shrink drastically on a rapidly rising market?
Typically, yes, but in this case, supply does come into it as well.
Right.
This isn't a gold product or a silver product that is just, you know,
mass produced,
and they're just deciding when to turn the tap on and when to turn the tap off.
Right, and it's easier to manufacture.
Correct. So there's, you know, it's in the same family with those, you know, metals, but it does have its own unique characteristics that make it a very different market.
That's right. Jack Hunt has been in business for how many years now?
We're in business since 1969.
Wow.
Yes. Right in Buffalo, New York. We've, like I said, what makes us unique is we work both sides of the market, right? We sell bars, coins, but we also buy in scrap. So every day we're seeing flows in both directions, which definitely helps you get a feel of investor sentiment as well.
Of course. So you're handling silver, gold, platinum scrap coming in, going into the refiner, being paid out based on settlement, assay, or cash basis, or maybe even trading for bullion.
Absolutely,
I'm
yes.
sure you do all of the
Absolutely,
above.
yeah. Every day you're seeing all of those things happen
All of
with
those
us.
things.
Yes.
What's the typical client? Is it a smaller coin business or a jewelry manufacturer?
Yeah, our typical client is jewelers, pawn shops, serving the retail market across the country. We have clients in, I think, almost every state.
Yeah.
I have to talk to our Hawaii clients, go pay them a visit. But yeah, we
that sounds like fun.
Yeah,
we'll go with
let's
it.
go. Denny.
Yeah, absolutely. Right, we'll make a whole thing out of it. We'll do another episode there.
Okay.
Right?
All right.
We'll
I
have
think-
to schedule a podcast.
Yes.
All right, perfect.
in
Maui.
Maui.
We'll leave the
How's that
suit
sound?
jackets and Hawaiian shirts, right? Okay,
Absolutely.
perfect. I love it. No, really though, it's like you said, it's community, local, serving local investors. So what's great about us is, like I said, having such a broad and diverse client base. You get that sentiment from across the country, right? So you're starting to see it's not just a trend here or a trend there. You can stitch all of these things together to see what these
And
patterns
that's
are.
a unique perspective to have because you're trading in the marketplace.
Right. Correct.
You're in the trenches, and that's valuable.
Right. We don't have to have our ear to the ground. We're on the
You're
ground.
on the ground,
Correct.
working it.
Yes.
Well, as someone working directly with traders and retail investors, what advice would you give about adding platinum to a portfolio right now?
First, I'd be majorly in favor for it. I think what I'm looking at, again, to go circle back to that ratio, like I said, the ratio's just dropped recently. It's about 2.5 to 1 on gold to platinum. If that were to touch 3 to 1 again, that'd be my entry point, because I think you're seeing, again, platinum's already underpriced relative to gold at 2.5. It's mostly been at 3.5.
But it's more rare than gold.
It's more rare, but the opportunities to buy may not be as easily available to you. Yeah. So I think, like I said, I mean, if you're going in now, you're not making a poor decision. If you're really looking to find that maximum value, that 3 to 1 ratio is going to be a really optimal point, I think, to go into. But I think you mentioned 10 years earlier. I think if you bought it now and 10 years from now we sat down, you'd be pretty happy with where,
Pretty happy.
Yeah, I
where
think
things
so.
turn out.
Especially where it's trending currently.
Absolutely.
Well, I really appreciate taking the time with us today, Denny.
Thank you. It's been an
very
absolute
much.
pleasure. Honored to be here. Appreciate it so much.
Thank you very much.
Thank you. We'll do this again soon in Hawaii.
In Hawaii. You heard that, folks. In Hawaii with Denny.